And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the Market Forecast. Today is Thursday, October the 14th. My name is John Hoagland. Thanks for trusting me with your time this morning. If you are already in the markets, hopefully you've got things going your way. As always, our focus is on context, risk management, and infinite patience. We've had some important numbers come out early this morning. 7:30, the jobless claims numbers came out. Basically, better than expected. Just kind of taking a look here. Where did it go? Here we go. Even more important, I think, is the CPI numbers that came out. And the jobless claims numbers all came out a little lower than expected. So that's, of course, always going to be good news. People getting back to work. The concern is, and where I think there's a lot of differing opinions, is with the CPI numbers. Now, month over month, we had an increase for 5.4%. They were expecting 5.3%. Last one month, it was still at 5.3%. So looking like inflation certainly continuing to creep into the economy. The month-over-month core CPI didn't change. It was 0.2%. So a little bit of conflicting information in there. Our talking heads and the economists du jour will try and figure that out for us. We're going to be focusing on our opportunities here in the marketplace. The nat gas is due out at 9:30, and then EIA crude due out at 10, of course, because of the holiday on Monday. The crude has been delayed until today. The FOMC minutes came out last night. From what I'm taking, from what I've been reading about it, the tapering may begin anywhere from mid-November to mid-December. They're talking about a 15 billion month pace of reductions of the buyback program. Many members felt as though that was not aggressive enough. So it's going to be continuing a little arm bending going on in the Fed as well as the government. Still lots of that going on. Still lots of uncertainties in the marketplace and lots of, hopefully, opportunities for us. Bank earnings today, as long as that CPI and jobless claims were the major focus this morning. Futures continue to try and push higher. Pre-economic numbers, looks like there's not a huge reaction to anything that's come out so far. And Bank of America, Wells Fargo, Morgan Stanley, Citigroup, U.S. Bancorp, and United Health all due out today. Most of the ones that I've seen have been positive. Of course, we're always going to be taking care of the banks now, aren't we? So no shockers as far as earnings, at least so far yet this year. We've got some more earnings tomorrow, some more of our major banks. Next week, I think we'll really start to catch pace as far as earnings are concerned. Oil prices remained on the under upside pressure. Is that correct? Is that right to say? Oil prices under upside pressure, or is it upside pressure? I don't know. The IEA has been pushing the fact that the economic recovery is creating more demand and outproducing production. Of course, we all know this. We can see it at the gas pump. The API last night, however, announced a surprise 5.2 million barrel boost in crude stocks here in the U.S. The EIA is expecting a 0.7 million barrel boost, 700,000 barrel boost. However, We got all that going on for us, which is nice. As always, make sure you hit the lucky like button. Share, comment, question, feedback, and heckling are always welcome here at the Market Forecast. Make sure you subscribe to our YouTube channel so you can get notifications when we do go live. Lacey is saying good morning to everyone. Good morning, Lacey. I live next to a school, and people are walking their kids to school, and they, of course, bring their dogs, and that affects Lacey's mood a little bit for a very short period of time. But she did want to say good morning. As far as the VIX, the dollar index, and the 10-year yield, VIX down almost 6% this morning, 1755, as equities continue to push to the upside. Of course, VIX is going to get pushed to the downside. Dollar index off a little bit this morning, 93.9, and the yield on the 10-year also coming off a little bit, 1.53%. As always, got to say good morning to everyone. I see that my brother is up early and at 'em this morning. You win the prize, Rick. First one in the room. Love you, brother. Brian, Harry, good morning. Daniel, George, good morning. Alfredo, Nick, Janus, Zerain, Spencer, Vince, good morning. Harry, good morning. Frederico, Laura, good morning. Vince, good morning. Calvin, Felix, the infamous Escobar in the room. Good to see you this morning, Felix, Dante, Tyson Wilson, Theo. Good morning, Kenneth Powell. Ho, can you help me settle an argument? What is up? What's the trend on the NQ? Up, down, sideways? Depends a little bit on what time frame you're looking at. We will see in the charts this morning. The daily, weekly, and monthly basically have an uptrend. The break is right now on the daily. I haven't looked at the weekly yet since Sunday, but the trend is changing. It changes on the shorter time frame before it will change on the longer time frame. We'll take a look at that, Kenneth. It's a great question. Three Lions Insight, Dr. VJ, Stephen, Frederico, Tone, and Farter of the Year. Good morning, Rob T. Hello, and good morning to everybody. All right. Got a good group here. We're getting ready to get into the charts, so let's do just that. As always, starting with the daily in Crude. Trend is, like everything, Kenneth, subjective. Everything seems to be subjective in trading. Here's the daily in Crude. Obviously, since we've broken out of this area here, we're in an uptrend on the daily chart. Should we put our rally sneakers on today? Well, it's certainly starting to look that way. We never really know. We're going to take a look here. Vince, Jason, good morning. Buenos Thursday. So we got to remember that crude oil is in rollover. Obviously, the trend is to the upside on the daily chart. Everybody's well aware that there are some supply issues that are going on. When are we going to do something about that is really my question. The structure to the upside is good. The health to the upside is good. We're maintaining volume in the front month, even though it's rollover. This morning of the volume in December was about half what it is in November. So I'm going to be trading November today. Tomorrow we'll take a look and see what it looks like in the morning. And if the volume is greater in the December contract, I'll switch. If not, I'll switch on Monday. It doesn't really matter. As long as the volume is relatively equal between the two of them, you can choose. But I'm going to say Monday, I'm 100% sure that volume will be greater in the December contract, and I'm going to trade that. Open interest. Got a pretty decent gain in open interest yesterday. That's good. Again, is it rollover related? Is the volume rollover related? We've got 3 days basically 2 days in balance. We could be testing the upper end of that balance today. But again, knowing that it's rollover and that our longer time frame traders are working on getting a cheap rollover more than being more directional, there's less of a probability of a breakout. Doesn't mean it can't happen. Anything can happen. Open interest increasing again. Again, that could be rollover related. API last night announced a 5.2 million barrel draw. You don't see that affecting price heading lower here, do we? EIA expecting a 700,000 million barrel boost. If I said API draw, I meant a boost. We added inventory according to the API. Much smaller inventory expected today from the EIA. Take a look at the 30-minute chart. So here's our 1, 2, 3, 2 days really of balance on the daily chart. So settlement, basically our overnight low. Settlement 80.44, put that on your charts. All of our overnight activity has been above settlement in large part. We've got some overnight longs in this market. We've put an overnight high very close to the upper extreme of the 2 days of balance that we are currently trading in. I find that to be interesting. We have gap rules. Okay, we've opened with a gap. If we can't close the gap relatively early, we look to trade in the direction of the gap, but don't discount the fact that we have a whole lot of overnight longs in this market testing the overnight high close to our high end of the bracket that we've been in, or the range that we've been in for the last 2 days. If we don't see new business coming in to bring price higher, a lot of our overnight longs are going to get nervous. They're going to say, okay, I don't think this is going to work anymore. And if they get out en masse, they could severely change the direction of this market, at least for the day time frame. What have we done as far as our opening range is concerned? Okay, here's the 8. What's going on here? Oh, we're not open yet. I was hoping that we would be open, but we have not yet seen our opening range. Point being, if the opening range remains the high of this session, there's a probability we're going to close the gap. Much like in the meeting yesterday, in the group meeting, we had a similar situation last week or so, where the market was opening. It was above value. It was a healthy upside auction. And we had an opportunity for the market to come close the gap that stopped short of it, which, anytime we can't close the gap relatively early, we look for continuation to the upside. So it's going to be another interesting day today in crude oil. Watching the opening range, watching to see if we do see some buy-in coming in to create a continuation for our shorter hands, weaker hands traders that are currently holding longs. That's what they're looking for. They're looking for help in the regular trading hour session. Let's go ahead and take a look at the S&Ps, and maybe we'll go back and see how the opening range may play out for us in crude oil. All right, so here's the daily in the E-mini S&Ps. Kenneth, we've got trend all the way up. One of the things that I'm looking at for trend are these exponential moving averages. Okay, this is the 20 session. This is the 50 session. The 50 session exponential moving average basically supported every pullback we had so far this year. We are now wrestling with that. The 20 session exponential moving average is now below the 50 session exponential moving average. Obviously, there's a difference in where the market kind of broke that upside trend. It's when the market started to kind of hold below this 20 session or 50 session exponential moving average. We're at risk of changing that market state. So in a medium market state, I say we are ranging. In a in a short time frame market state, I would say we're ranging. In a medium time frame market state, I would say we have a trend to the downside in progress. In the longest of time frames, I'm still looking at on the monthly, have we really broken upside structure? That's debatable. So today we've got The the market tried to look down towards weekly kickoff low, which is about the 5%. It's 43.10 is weekly kickoff low. Open interest, we had a pretty good increase of 3,000 contracts, indicating this wasn't necessarily short covering. This was new buying coming into the marketplace. Doesn't surprise me that the market is trying to continue that move to the upside. This trend line, visual resistance, 1, 2, 3, 4. A little bit of a break of it here, but overall, this trend line has been relatively resistant. We are at risk of changing market state again from range bound in the short time to perhaps a move back towards the upside. A lot of this is, of course, what do traders remember? What's the focus of traders? Is it the uncertainty, or is it the possibility that we're going to continue to flood money into the marketplace? Right now, it looks like their focus is on flooding money into the marketplace. Earnings, jobless claims, PPI or CPI, a lot of uncertainties, but traders do have short memories. This is going to be an interesting trading day in and around this trend line. Take a look at the 30. So here's weekly kickoff low. We took a couple of stabs, couldn't get quite to it. Ken, you got it. Lacey, she's sitting there just looking out the window, waiting for some of those nasty other dogs. Okay, anyways, yesterday we had a pullback. We opened above the late spike that was 2 days in a row. We opened above that late spike. That's something that always keeps in my head when we were looking at these late spikes. We did take a look lower. We looked at the weekly low, but we could not find a new business to do down there. So we spent the rest of the day recovering and closing back above the weekly kickoff low. Back above the late spike that occurred that we did open above. Sometimes it takes the whole day for these things to kind of play out. The market just wanted to come back down, retest this area. Found buyers, closed well, 43.55. We've got overnight inventory all to the long side. We are testing the trend line on the daily chart here. We've got oodles, and that's an industry term. We've got oodles of visuals above the market. We've got this point of control. We've got this point of control. We got last week's high. We got a point of control from way back when. We got points of control all over the place above this market. If they're going to focus on that, that is where price will be going. We are opening with a gap. We are opening with a substantial overnight inventory to the long side. What are they looking for? They're looking for help. When the regular U.S. trading hours open up, if we don't see buyers coming into this market right away, I think it's going to increase the probability of a push back to the downside, back towards a gap close. This would be a substantial gap to close. I'm going to be looking at it, and I'm going to be kind of hoping for an inventory adjustment to come back lower, to not close the gap, to give me an opportunity to look for this market in weakness and then see this market continue this move to the upside. We do not know what is going to happen. I want to take a look back at the crude oil here, see if there's any information from our... Okay, so... $8 here is our opening range. Opening range remains the high of the session. You can see on the 30-minute chart, all of the overnight longs getting to a point where they might start to get nervous. I'm not worried about them here. I'm worried about them if we start to test below this area of consolidation that we're seeing. But if we've already taken our opening range trade, we're sitting in money already. So we watch and see if this market can come down and close the gap. If it has trouble closing the gap, this would be a support level, and we can look for the market to continue. So be cautious, but there's information in what it is giving us right now. All right. On to the Nasdaq. So, Ken, you were looking at the Nasdaq up, down, sideways. Here's the daily chart. So obviously the market was in an uptrend in the longest of time frames. In the medium time frame, we've come into a downtrend. We have fallen into balance as part of that downtrend, and we are perhaps at risk of breaking out of the balance area that we're in. Okay, this balance area and this balance area are overlapping, so that might be an indication that the downside medium time frame or short time frame auction could be tiring. We came off the weekly kickoff low yesterday, adding 2,700 in open interest. Volume was okay, not tremendous, but these markets, equities don't bring in huge volume on up days. It's when the down days come. So, we're looking for continuation today, and so far we're doing very well. Weekly kickoff low rejected. Volume and open interest healthy. Economic data, unemployment, uncertainties. Traders have short memories. If it's not fresh on their mind, the equities tend to grind higher. So we've got that going for us. Take a look at the 30-minute chart. We're going to see a lot similar to the S&Ps. Here's settlement, 14,764 and a quarter. Our overnight low, can't even get to it. We've been driving higher all night. Shorter hands, weaker hands traders holding new long positions. If they don't get what they're looking for, and again, what are they looking for? They're looking for regular trading hour traders to come in and buy this market to perpetuate their longs to greater profits. If that does not happen, if we leave the opening range at the upper extreme of the day, and this works for the S&Ps too, if we leave that opening range at the high, the market may bring us, because of the extent of the overnight inventory being so long, we could get a deep pullback on the opening range trade. And if we, again, can't close the gap or find acceptance in the gap or inside value from yesterday, that might give us a nice opportunity to look for a long on weakness. Just the fact that the opening range is left at the high could be a good fast trade where we're going to take advantage of all of our longs getting nervous, getting out of those longs, pushing price lower. If you're going to do that, make sure you're reasonable with your profit target. Be reasonable with profit targets that are against the bigger picture. And in the daily, the bigger picture is lower, but for the short time frame, we've got a pretty decent move to the upside. So if there is a change in the marketplace, we do not want to fight it. Gold. Gold is in a very, very interesting situation. Obviously, gold off this high, trending lower. Lower lows, lower highs. Now we've got a higher low. Now we're at risk of breaking out of a trend line that's got 1, 2, 3, 4, 5 points of contact. That's a pretty solid trend line. We are at risk of accepting above it. It was a very satisfying breakout from balance yesterday, a 10-day breakout. We added 17,000 in open interest. Look at the volume yesterday. Okay, this is encouraging for a continuation of this breakout. It attracted a lot of eyeballs. It attracted a lot of new buyers coming into this market. And those new buyers are holding on. It's not like those new buyers went home flat. We added 17,000 in open interest on a breakout day on higher volume. This is very good. This is we've got a couple of stumbling blocks for a true break in market state to moving back to the upside. We've got this trend line, which we're wrestling with today. We also have a former weekly kickoff level, that 1807 to 1809 that we talked about so much when we were back in this area. We're coming back to it. It's going to be remembered. It's going to be muscle memory. It's going to be a tough level for us to get through. But if we can get through that on high volume and higher open interest, then I think we may be in for a greater market state change to the upside. I mean, after all, if we're going to be in an inflationary period for a period of time, the dollar is going to be worth less. Gold, shouldn't it be worth more? Doesn't that make sense? Just saying. Take a look at the 30-minute chart. Yes. While we do have a P-shaped profile here, this obviously was much greater than just short covering. Short covering, we would have lost open interest. This was short covering and new buyers coming in. This was a really strong day. When we opened up, if you remember, we were overnight longs. Those overnight longs got out. They got nervous. Buyers came in, moved us back to this important inflection level here, this 1780 weekly kickoff high. When we accepted above it, it was game on to the upside. If you were in my private coaching meeting yesterday, I was like, I'm out and I'm not doing anything because this market has a tendency to run and sit. Well, here it still sits. We've now tested this naked point of control. We don't really have much of a gap here, do we? No, we don't. But are we accepting value from yesterday, or are we going to reject it? That's really the question. Where we are now looks like an important area for us to be thinking about an execution. There's probably fish in that area. On to the last three of our group of products that we look at yesterday. Dollar kind of got whacked overnight. You can see that in the day yesterday and in what's been going on today. Volume was pretty good off that low, but we lost open interest, indicating that this was short covering rally. This was not new buyers coming into the market. We'll be looking for those probably as we get closer to and test weekly kickoff high, if we get there, which, by the way, is 1.1650. Lacey, don't be such a moose. You're a moose. So let's take a look at the 30-minute chart here. So here's settlement, which is 116.03. We've opened with a gap. We've got some overnight inventory capitulating and reconciling those positions. Have we traded to close the gap? Looks pretty close. But this may be a support area. Our overnight inventory may be out of those longs, which takes selling power away from the marketplace. Another very interesting place. Look at what we've got here. We've got yesterday's high. We've got settlement. We've got yesterday's value area high, and we've got the overnight low right in this area. This is a target-rich area. If it gets there, if it doesn't, there might be opportunity and fish there. Lacey, take it easy. To the 10-year. Okay. As rates ease, shorts cover. We lost 45,000 contracts yesterday on some pretty decent volume off this low. This was not new buyers. This was short covering, probably some profit taking. Take a look at the 30-minute chart here. Oh, we may have actually a bear flag forming here. Here we have the breakout below this level, a move, a bear flag, another move lower, a bear flag. We're really looking at weekly kickoff low as the termination of the measured move that we've got going on here. So take a look at the 30. Settlement, 131 and 7/30 seconds. We've got some long inventory overnight here. Look at the P-shaped profile from yesterday. Lost open interest, P-shaped profile, short covering. It's taking buying power basically away from the marketplace, but our overnight weaker hands are long. We have, but we're still in range and we're still in value. It tells me that I'm really not in a big hurry here to try and get involved. Our overnight high, yeah, that looks very interesting, as it is close to yesterday's regular trading hour session high. Is it strong enough for me to make a move? I don't know. Let's take a look at the net gas now. And don't forget, we are looking for information from the nat gas. We've seen some new business coming into the market off the weekly kickoff low, which did occur on Tuesday, where we saw an increase in open interest yesterday of 15,000 contracts. That's rather substantial for the natural gas. We're looking for a true test of, guess what, weekly kickoff high here, which is 5855, 585 and a half. Look where the new high is, 585.6. So we're coming into a little bit of resistance here. But, when we're looking at the bigger picture, the, medium time frame is looking to the upside. We've run into some issues here, but, with everything going on in Europe, everything going on here, what's this market really trying to tell us? Well, we saw some buyers coming in off this low. If we can break out above weekly kickoff high, then we get to another test of this several year high here, and then who knows about points above that. What's it look like on the 30? Get Lacey bugging me here. She's just very distracting. So settlement is here. 559. Pretty decent move to the upside. Not P-shaped, obviously. With the increase in open interest, there's money coming in. We've got some overnight longs here that are holding on for what they are looking for, and that's regular trading hours buyers to come in here. If we can't get above the weekly kickoff high here, I'll look for some of these weaker hands longs to start getting out. But if we can get above here, we may see all time frames act in concert to move this market higher. All right. Okay. All right. So, Fred, it's Ken. Hopefully that helped. It's focusing down from the longer time frame to the shorter time frames. And in each of those longer time frames, there's several market states that kind of ebb and flow along the way. Even on a monthly chart, you see periods of time where there's range-bound activity that can last a year or even longer. Weekly charts, you can find, range-bound and directional activity that occurs for several days, weeks, and months at a time. Then going down to the daily chart, you're getting more of a finer look. But when there is a major market state change, like we may be seeing in our equities for the time being, it's always going to show first on the shorter time frame chart. We're going to be waiting for the end of the week to see how the S&Ps close. We're going to be waiting for the end of the month on the monthly chart to see how things look. So, all right, Fred, my pleasure. Hopefully that the things we discussed yesterday were beneficial to you, Fred, and beneficial to everybody. Don't forget, we are adding another session of group coaching every week, Monday and Wednesday, 1 p.m. Central. As we get closer, well, here, I'll put in the link for both of them. Now, it's the same link, so you don't have to worry about trying to monkey through a bunch of different links. And here it is. And I look forward to seeing you there. Lacey, come here. What are you chewing on down there? Come here. Come here. Come here. Come up here. Say hello to everybody. Come up. Come on. That's Lacey. Hi, Lacey. Something tells me that yellow thing is going to be hitting me right in the lap. There it is. All right. Thanks, Lacey. All right. Hey, I'll give you a kiss later. Get out of here. Got to say goodbye to gotta say goodbye to everybody. All right. Let's take our deep breath. Let's be ready. We've got about 10 minutes here before the equities open. Love the fact that we have that time to settle in and be ready for it. Humble, grateful, creative, and patient, ladies and gentlemen. It's Thursday. We got today and tomorrow to finish up this chapter in this year's book of trading. Let's make them good ones. Get out there and profit today. Looking forward to your success. Trade well, and I'll see you in the pit in about 5 minutes. Have a great day.